Guidance for the second quarter leading to a dip in Cisco shares, even after a solid beat on the top and the bottom line. The company giving really what you have to call a dire forecast for Q2, saying they see revenues falling 3 to 5% versus estimates of 2.6% growth. Cisco's EPS forecast falling several cents below estimates as well. CEO Chuck Robbins saying macro issues such as the U.S.-China trade war, Brexit, and U.S. political turmoil are leading to lower business confidence and then impacting Cisco. On the call, Robbins offered more insight into the business factors that led to that weak guidance.
Saw public sector continue to be strong, but the rest were, in enterprise commercial did weaken. Service provider and emerging markets, which were stressed last quarter, were about the same. We had shown the ability to offset that with strength in commercial and enterprise and public sector. And when those weakened, obviously this quarter, that impacted our ability to offset them.
We got a quick take from Needham's Alex Henderson. He raised the stock as a hold, and he added in reference to that guidance, perhaps a shock to investors that might have thought that this was a more stable growth business. And weakness looks to be from Cisco's cloud customers and service providers. Service providers includes companies such as AT&T and Verizon. We're going to continue this conversation about Cisco during an exclusive interview with CEO Chuck Robbins at 9 a.m. on Squawk on the Street tomorrow. Melissa, back over to you.
Frank, thank you. Frank Holland back at headquarters. What do you make of the second quarter in a row where Cisco's blaming U.S.-China as dampening consumer or business confidence, enough to spend at least?
I don't know. I mean, it used to be that Cisco would announce, and that would be really a proxy for how corporate America or maybe worldwide is doing. And I wonder if that is the case now, if it's not so specific to them, but it is more a broader concern. So I don't know. Actually, I'm surprised that futures aren't down a little bit on this, because I think it's kind of a big deal.
Yeah, that Q2 sales miss, by the way, that's $1 billion. Mm-hmm. It's $1 billion shortfall.
It's the revenue. It's a big miss. I mean, you go back to the middle of July, end of July. This was a $57 stock. 2 weeks later, it was trading 46 on commentary, basically like we're hearing now. So I think we absolutely go back and revisit that August low. I think was 46. Regardless of what you think about valuation, their clarity going forward, U.S. China, I think this stock is destined to trade that low, and we'll see what happens when we get there. But to Karen's point, I'm surprised that this is not having. This should be bigger than just Cisco, is my sense.
What I would love to know, and I think maybe you can only figure this out by reading the transcript at this point, is qualitatively, where did they see, was this a consistent hang back in terms of spend throughout the quarter, or was it more recent as the China trade headlines started getting a little bit more tense?
I think they said the whole quarter was bad.
Okay.
Yes.
Because the interesting thing about Cisco is that, of course, they're on a fiscal calendar, so they report a little bit later. You might get a little bit more clarity in terms of what is happening more recently in time.
Yeah, and the pressures that they put this out there already once before. Now they do it again. And to Guy's point, the 46 number, I mean, 58 to 46, and here we are back again. So, but the problem I see going forward is we need to see them actually put us back in place with a quarter. And they can't keep doing this, because if the rest of the market isn't quite as negative, unless that changes in the next quarter, then Cisco was right. But otherwise, is this more of a Cisco issue right now?
You think so?
Well, it certainly could be. The competition has gotten fierce.
Yeah.
And we all know there's not one, not two, but at least 2 or 3, 4 competitors right now with Cisco. They're still the big one, but they've got competition.
Yeah, so earnings are lagging and guidance is leading. This is the second time, to your point, that we've heard about lowering guidance. So I don't think it's so much as a macro call anymore. I think it's a Cisco-specific call.